43 Penny. Quite simply, we specialize in identifying unique upscale residential rehab opportunities, invest what's needed to increase the value, then quickly resell these properties to maximize the return for investors. We got our start 2 years ago, all of us searching for some opportunities. We partnered with a developer who had extensive residential and commercial experience and decided to return to markets we knew, markets that were hot, and we went with what was available, which at that time were low-end residential flip projects that required simple cosmetic upgrades. And it proved to be very lucrative and successful for us. Now, numbers are the key to success in this business, so let's go over what ours are. 29 flips over 24 months. Not all winners, but 28 of the 29 have been profitable. And a loan loss? $2,500. That's it, 1% of one of these houses. Our average in price was $207,000 with an average out price of $263,000. Now, 16 is a very good number for us. You know, it also coincides with the 16 miles the astronauts drove the lunar rover across the moon during Apollo 16, which launched on, guess what, April 16, 1972. Now, we've not been to the moon, obviously, but 16 does represent the average net return per house following all fees and commissions, 16% return. And the last number we like to brag about is 58, which is the average number of days we turned those 29 houses around for sale. But we learned something else in the process. This was entirely too much work for too little profit. And even though we were successful, we recognized the need to shift strategies. The market became crowded with flip this house rookies showing up everywhere, and the termination of the federal government's first-time buyers credit, which slowed the housing movement. Additionally, the federal stay on foreclosures in 2011 further reduced inventory. So when the market changed, we adapted. We found bluer waters and created a new model. We went where others cannot, which is to the upper end of the market, where we identify houses not up to par, but with tremendous potential. We work with elite real estate brokers who bring us properties that are not yet publicly listed. Private listings, silent listings. These houses need more than just cosmetic changes and require the expertise of not just a remodel, but a redesign, a new layout, a bigger kitchen, better lighting in the bathroom, kill a useless bedroom in exchange for a new walk-in closet, redo the landscape, change the fascia, increase the curb appeal. All experiences we are very good at doing. As a result, our profit per project is higher now in total and on a per dollar invested. Our target is to purchase houses in the $400,000 to $800,000 range, work our magic, and then remarket them in the $700,000 to $1.3 million range. Crazy? Can't do it or shouldn't be done? You know, we've heard the skeptics. Here's one of our projects, a house in Scottsdale. We purchased for about $400,000 and turned around in less than 90 days and sold it for about $625,000. Again, more than just a cosmetic cleanup. It was a total remodel. But because we're the developer, the designer, and the contractor, work delays are almost non-existent with us. And because we control the project in its entirety, we can keep the project moving forward more efficiently and within budget. This was a house with a ton of potential in a market that was prepared to snatch it up once completed. Now, current upscale projects we have in process. 2 are in the San Francisco area, followed by another in Fair Oaks, California, which is a suburb of Sacramento, another house in Scottsdale, and 2 projects in Denver, which is rated, by the way, the number 2 market in the country for fastest moving properties. In technical terms, it has the second lowest DOM, which is days on market, in the United States. In an article published by the Denver Post, houses in Denver are on the market for a low of 33 days and an average of only 88 days. Inventory in the Denver market has decreased by 42% since 2011, from more than 17,000 houses to just over 10,000 in 2012. In the upscale category, the demand is even higher since the inventory is significantly lower. Now, our targets on these upscale rehabs is 30 to 35% gross profit and 20 to 25% net profit after all fees and commissions are paid out. If the project doesn't fit the model, we don't do it. It's that simple. We've gotten this far by sticking to a sound business model so we don't stray from it. It's all about the deal. So, what is the opportunity for you? Well, we keep it simple. Although we are looking for long-term investors, we're fine with offering per-house deals to allow you to get to know us and to let us get to know you. In an effort to keep it simple, we bring to these deals the financing, the money for the remodel, the responsibilities of the general contractor, the project management, and the rest of the management of the transactions of getting in and out of the houses. We come to the table with money and skill. Now, we've done this for 3 years, all with our own cash and very limited financing. In order to capitalize on the timeliness of our niches and our skill sets, we need to do more faster. That's what's created our need for partners. What we're looking for from investor partners at this juncture is simply the down payment and carrying costs on specific projects. We handle everything else. We see there are limited opportunities to capitalize in the markets we're already succeeding in, and we want to do more. So what are your options for participating? There are 2 choices. Now, option 1, definitely the safest. The investor provides a loan completely secured by the real estate. You receive a second deed trust on the property and then 10% interest for the term of the loan at close. 10%. Now, where are you getting that kind of return these days? The investment is secure. You hold a deed of trust on a real estate asset that only has upside potential. Remember, we bought low and we're going to sell high. Option 2 provides a higher return. It's where the investor comes into the project as a true partner. The profit share percentage is tied to the investment. The more money invested earns a higher percentage of the net profit, targeting in the 15 to 20% range, as opposed to the 10% for the loan route that we discussed in the previous option. If an investor would like to expand participation even more, then in addition to the down and carrying costs, investors can also invest in the remodel or even supplant the financing we usually bring and ultimately profit share by as much as 50%. Now, we've been successfully working on a moderately small scale until now, and while we don't want to go crazy, we feel we can grow more effectively with the proper use of investment partnerships and an intelligent use of leverage, enabling us to create a nice return for all parties involved, without increasing the risk to the point where anyone is uncomfortable. However, having done this up to now with all our own cash and financing, we're not desperate, nor will we compromise. We're simply looking for the right situations that make sense. Now, the 2-year goal of 43 Penny is to complete between 25 to 30 upscale rehabs and create an investment fund for these projects where investor funds are constantly rolled from one opportunity to another and investors earn a return each time a transaction is completed. Eventually, we plan to move into commercial properties, and the wheels are already in motion with a commercial strip center that's been purchased in the Sacramento area. So there are several ways to participate for you based on your risk tolerance. You know, to most people, a penny is nothing but an annoying pile of coins on the nightstand or in a coin jar. But don't be too quick to throw away a very specific 1943 penny, as it holds incredible value, one that places its 1 cent face value at $2,000, or in one case, at $1.7 million. It's all about knowing, understanding, and appreciating value and the worth of things that are unseen by most.